Hi guys, my name is Nicolette Mashile. I'm also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today I want to talk a little bit about the importance of risk management in your life, especially if you have financial dependence. Right, so I just finished a financial coaching session with one of my clients, and there's something that really stood out in this specific session, right? But do remember, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody who's certified and register with the FSCA. So we're going through her budget because one of her biggest problems is the fact that she earns a substantial salary, but however, after paying all of the things that she pays every single month, she just does not seem to see where her disposable income goes to. So the first question obviously I ask is, do you budget? She's like, not really, I don't really budget. So I'm like, okay, it's fine. Let's actually go through what are some of the things that you are paying for every single month so that we can see how much disposable income you have, and that so that we can allocate that money to specific things in your life. So we can either allocate it to paying off some of your debt, we can allocate that money to investing in a portfolio, we can allocate that money to maybe starting a business, right? So as we're going through some of the things that she's paying for, I realized that she's paying for 2 funeral covers. So she's got a funeral cover with FNB and she's got a funeral cover with another financial institution. Then I say to her, okay, so you are paying these amounts of money. I think she's paying 130 Rand somewhere and she's paying 230 somewhere else. So then I say to her, okay, sharp. What happens now, because you've got a 12-year-old daughter, what happens if you pass away? What will happen to her? Because at 12 years old, she still has 7 years of probably primary and high school, then 3 more years of tertiary. And if you only have funeral covers, they're only going to pay for the day. And then what happens to this child? So she's like, no, but I've got a bond, so I have a property. I'm like, yeah, but you're still owing on that bond. So what happens is that they're going to wind up your estate, they're going to look at your assets, they're going to look at your liabilities, they're going to liquidify all of your assets or put them into cash. Then they're going to pay for all of your liabilities. So what will your child be left with all of these years that she still having to face? She's like, no, I actually have a life insurance cover of 1 million Rand. I'm like, okay, still, that's good. I'm glad you do. But with 1 million Rand, you still can't afford to die because your poor child, they have to take that 1 million Rand. They've got to minus all of your liabilities because she's got other debt, plus this home, which is almost 500,000 Rand. So your child is going to be left with south of, 400,000 Rand for the next 9 years to be able to give your child an advantage. So risk management is quite important. And I think it goes with identifying, one, that you are a very, very important asset. And if there's any type of insurances you should be getting, is insurances to cover the one source of income or the one way you make money. And for a majority of us, the one way in which we make money is the body we've got. It's the life we've got. But more than that, I then say to her, why do you have these 2 funeral covers when you could take that amount of money of the funeral covers, allocate it to the life insurance, bolster that, and actually get cover of like 5 million? Then what you need to do is you need to then seed a portion of that life insurance to the bond holder or the bond, the financier of your home loan, so that if something happens to you tomorrow, they will seed that amount of money. The insurance will then pay for the bond. So because she doesn't have bond insurance, she could potentially get that insurance over that skolot or that debt of the house from the life insurance. But she will need to obviously increase the life insurance, right? So one way of looking, she's like, no. I don't want to cancel my funeral covers. I've been paying for so long. Guys, it's important again to remember, you can have paid insurance for the last 10 years. It is still just an insurance policy. It is not an investment. It's not an investment. It is an insurance policy. Same way, somebody else can take out the same funeral cover tomorrow, or they can take it out tomorrow, pass away end of January, and it will still pay that 50,000 Rand that they're promising you for life, for funeral cover. Because that's how insurance works. You are going to the insurance company and you are saying, listen, guys, I'm scared that I'm going to die soon. And when I die, I would like to have money to be able to bury myself. They're saying to you, yes, we understand that the possibility of you dying is a very real one. But we think that you're not going to die tomorrow. So we are going to give you a premium to pay every single month so that you can be guaranteed that the day you do die, we are going to be there to be able to pay so that you have a funeral. That's basically insurance in a nutshell. It's a company taking on the risk of a potential loss or damage to a specific asset or a life. So the insurance company is saying, we're going to take the risk of paying for your funeral when you do die. But we don't believe you're going to die tomorrow. So that's why we give you a premium so that we can collect for as long as you're still alive. But that also means that if you do die in 3 months, they've got a responsibility to pay because they took the risk. So it doesn't matter that you've been paying for 15 years. It means that you actually prepaid for those 15 years. So you didn't die in the 15 years. If you move on to something else, it doesn't matter because that was not an investment. However, this is not financial advice. So it does not mean that you let go now of your funeral covers and then you leave yourself vulnerable. It is, though, important to look at what alternatives are out there. There is an alternative called comprehensive life cover. Now, in these comprehensive life covers, it comes with a life cover that has specific benefits. And remember that in the long-term insurance, is it called long-term insurance? Long-term insurance space, there are life covers that have additional benefits that can really be assisting in terms of making sure that you are covering yourself, because it's not just death that you need to cover for, it's disability, it's dread disease or near-death experiences, it is temporary disability, it is income loss. So if you lose your income due to the fact that you are not able to work, maybe you have got some sort of disability, then you've got income protection. Also, look for something that may also potentially have a benefit if you get retrenched, so some sort of retrenchment benefit. So it is important to make sure that you're looking at a financial solution that is going to speak to, 1, your insecurities, 2, your anxieties, 3, to making sure that the people that you're going to leave on this earth are able to still carry on after you are actually gone. And I think also just for yourself when you are still alive, nobody wants to be a burden to anybody. So it is important to make sure that you are putting in the right type of risk management so that if anything is to happen in your life, you are sorted. I hope that is clear, very short and sweet, and I'll see you guys on the next one. Mwah.